Hi, from Kelvin, just pointing out that I might not be interacting very much, but I will be listening very well. Thank you. I'm busy on the side here. Have a nice trading session. All right. Thank you, Kelvin. Thanks for your support. So today, as we all know, is the first Friday of the month, and definitely the things that take the central stage today will be the US non-farm payroll. So we're going to talk about this today, and later on we can watch the result together and also see the price movement together. And we will discuss before it happened, which is roughly about half an hour later, and we try to make some prediction, make some speculations, and also on several asset class. And you this depends on you whether or not to trade on the news. But for my side, I would say it is very risky. But as we also know, greater risks also come with greater reward. So that is definitely depends on you. But yes, today main topic we will just focus on the non-farm payroll. Any questions before this, you also can type in the Q&A. So if I can help, I will definitely answer your questions. We will wait for another maybe 3 minutes, then we will begin for tonight webinar. Once again, welcome guys. Thanks for your support. So we will begin in about just wait for another minute. Wait for more people to join us, and then we shall start today's topic. Today's topic we're going to talk about the non-farm payroll NFP because it's going to release about in half an hour time. Yep. So stay tuned. All right, welcome guys. So let's begin. So before I start, allow me to read out the disclaimer, okay, before everything. So today Market Insight webinar is intended for educational and informational purposes only, and participants shall not take it as a financial or investment advice, nor a trading signal. The accuracy and reliability of the information provided cannot be guaranteed. PU Prime and I hosting the session are not liable for any losses or damage resulting from the use of the information presented today. Participants are responsible for independently verifying information and considering their own financial goal and risk tolerance. Okay, this is the disclaimer for today's event. So yep, without wasting time, let us begin. So today's topic is to understand the non-farm payroll. Okay, and then today's event is presented by PU Prime. These are the topics that we're going to cover today. We're going to talk about what is non-farm payroll, why is it so important, and how does it impact on the market across various asset classes, definitely including the USD, some commodities like gold and oil, and also some major pairs. And then after that, we can analyze the recent data and trends. So maybe from there, we can gauge the number that's going to come out later, which is about half an hour time. We can watch it together. Okay. And then from there, we can discuss the impact on dollar. And also, we can also talk about the NFP and also its relationship with the Federal Reserve next monetary policy. Okay. So what is non-farm payroll? Regardless you are amateur or beginner or veteran, definitely you will come across the non-farm payroll when you first started to trade on Forex. This is a very impactful and also one of the most famous piece of economic data when you trade on the Forex. Even though you're gonna trade on the news or not, you definitely have to pay attention on this because that will be have a very big impact on the dollar. And we also know vast majority of the asset class they have a very high relationship with the dollar. So when it does impact on the dollar, it does you can almost say that it has an impact on across all asset classes. Okay, and just to let you guys know, maybe we have some new trader or beginner here. The non-farm payroll will release on every first Friday of the month for the previous month NFP. So for example, now today, this is the first Friday of August. So you will get the July non-farm payroll, US July non-farm payroll tonight. Okay. So what it is? The non-farm payrolls represent the comprehensive count of paid US worker across all business accessories in the US, excluding the worker from the government, from the private household and non-farm profit, as well as the farmer employees. That's why they call it non-farm payroll. Okay. So just for you guys to know, the economists actually expected the July non-farm payroll come to the number of 200,000. The previous reading was 209, so it will be slightly lesser than the previous reading. And why is this piece of economic data is very important is because from here you can actually see whether the economy of the US is very healthy. You can actually pulse it. You can know the condition of the US economy of the previous month or maybe like concurrently. Okay, so for example, when you see there's a increase in the non-farm payroll number, what does it tell is you can in two perspectives. For one, is might be the business in the US is expanding, whether it's a big businesses like big company that you heard of, Apple, Amazon, Tesla, whatever, up to like small businesses. If they expand their business, they're doing good. They might want to hire more employees to work for them. This is why can tell when a business, when the economy is expanding, when a business is expanding, they will get more employee. That's why you will reflect on the NFP. Another thing, when the normal employee, like me or I don't know any of you, like a single household, and when they get jobs, okay, they get job, they get paid, they get hired, and they get they have money to spend. So this is also means that the consumer, the spending power is better, and also in a way boost the economic in the US. So up to here, we can know that if let's say the NFP reading is good, this means that the US economy is good. So definitely it will have a very positive impact on the dollar, and the dollar we can expect the dollar to go up, to trade higher. The DXY will go higher. And so if those asset class that have an inverse relationship with the dollar, let's say GBP USD, EUR USD will go down, okay, because they have the inverse relationship. So vice versa, if let's say the number that came out is lesser, softer, weaker than what we expect, it means that the economy in the US is worse than what we expect, and this means that they will have a negative impact on the dollar. So we can expect the dollar to trade lower, DXY will trade lower, and also in an inverse relationship, other major pair like what we mentioned just now, like maybe Australian dollar USD or New Zealand dollar USD might go up. This is the example. So, but bear in mind, it is also is very related. We talk about in NFP. There's no rules of thumbs to say like, oh, beyond this number, let's say beyond 200K, 200,000, it means the economic is doing very well, or lower than 200,000, lower than 200K, the economy is not doing so well. This is not the case. It is also you have to compare the NFP with a lot of other factor, because as we all know now, US is facing a high inflation. Not so high as a year ago, but it's still far beyond their targeted inflation rate, which is 2%. So from the previous data, we can know now the US inflation is about 3%. Yes, this is one of the example. You have to compare the non-farm payroll number to other factors such as the PMI and unemployment rate, and then CPI as such. Okay, so we cannot just say that you look at this number, you can see that means that is a good impact on the dollar, or now we can trade, we can open short, say this number is not doing good for the dollar and we should short it. That is not the case. Okay. So because we already talked about this, let's discuss some of the recent trend, and then from there you can make your own speculation or prediction on what's the numbers going to be, and also whether it is good or bad to the dollar. Okay. So first thing you can see from here, this is a 2 years chart for the non-farm payroll, and if you put it in a bigger picture, you can see that it is like slightly going downward, meaning to say the adding number for the paid worker in the US is actually descending. But this is also makes sense. Why? Because since last March, US government, the Federal Reserve, they try to control the inflation in the US, because once it hit nearly like double digit, I think the peak was like 8% of inflation, which is crazy. That's why the Federal Reserve tried to implement a very hawkish monetary policy. They tighten up the monetary policy so that the economy will being restricted, and yeah, so that they can control the inflationary pressure in the country. That's why since last March, when the Federal Reserve start to increase the interest rate, you can see that there's a trend, there's a tendency that the non-farm payroll are getting lower and lower. So with that being said, we can expect the data that's going to come later will have maybe meet what the market predicted, or even lesser. But also maybe it does surprise us, come up with a very high number. Why? Because if you're aware, in the market on Wednesday, here is the ADP non-farm employment change. This is from the private sector, so this is not from the US government. But from here, you can actually have a kind of like a preview because the NFP will come out today, Friday, but this was on Wednesday. So the number came out much higher than what is forecasted. The forecasted number was just like 189K, but it came out with 324K, which is much higher than what is predicted. That's why from here you can actually predict maybe the non-farm payroll that's going to come out later will be maybe higher than 200 or even higher than 209, the previous reading. So let's say that's the case, that will definitely have a very positive impact on the dollar. So if you already have been trading all this week, you can actually tell the dollar has been very strong, has been very bullish against almost all asset classes. So if later the non-farm payroll come up higher, I don't know how high would be high. That should be let the market to perceive it. So, but I would say if let's say it's above 10% higher than what's predicted, maybe 220K, 250K, I think definitely the market will react very positively for the USD. Okay. And also, hold on, there's a. And what's come along with the non-farm payroll is the US average hourly earn. So hold on, it's a bit, yeah. But this piece of data will be relatively stable. What does it mean is this is to show that there's any wage growth in the US. If let's say the number come up very high, it means that the US employee, they get more pay, higher pay, which in a way encourage them to spend more. So they can consume more, their spending power is higher, and they will boost the economic better. And as a result, the inflation will be higher. So let's say if the US average hour earning is higher than the predicted number, they will also give a very positive impact on the US dollar. And another thing would be the US unemployment rate. So all these three economic data will come out at the same time. So this is also very important. So if let's say the unemployment rate is lesser than what is predicted, this is also a very good impact on the dollar. Because now you can see actually after it's go down, and this is when it shows that the market, the economy in the US is doing well, everyone have their job, the unemployment rate in the country is under control. So but recent trend, you can see there's like a small spike up in the unemployment rate. So if let's say the number is good, it's not good, it means high, more people in the US, they are unemployed. This is also maybe from the side show that the economy in the US is getting started to slow down. So then the US, the dollar will trade softly, trade softer. After we talk about these three very important US economic data that's going to release probably about 15 minutes later, we also can have a glimpse on those economic data they already released since last NFP reading release. So from here, you can actually see the US CPI is actually lower than what they predicted. So this also means that the inflation in the US is already slowed down. The year-on-year CPI already came down to 3. So if I'm not mistaken, their peak was at 8%. So the Fed has already did a very good job. They put in effort to control the inflation, and this is I think the result that they want to see. Okay, and the crude oil inventory also higher. This means that crude oil inventory also from the side you can tell the economic activities in the US. If the inventory is higher, it means that people use less oil. So when people use less oil, you can say that probably the US businesses is not so well. They're using less oil. Okay. And yep, also the retail sales, and also the housing is also not doing so well, as well as those PMI reading. You can see that now in a bigger picture, you can tell the US economy now is softer. They are moving, in a more moderate pace rather than after the post-COVID, when they open up their border, when everyone start to do business, like a boom, everything was so well. That's why they pushed the inflation so high. And that's why last year, the Federal Reserve stepped in and tried to control the inflation, try to control the economic growth in the country. That's why since then, the dollar was quite bullish, because when you add the interest rate to the country, they will be a factor to appreciate your country's currency. So yeah, you can take a glimpse. This is for the past months, all the important US economic data. So from here, you can give your own prediction whether or not the non-farm payroll that's going to unveil later will be a good number, which is higher than what is the market forecasted, or will it be came smaller number than what's the market forecast. Okay, because we have also rather a mixed result, because remember last week, I think last Wednesday, when the US reviewed their GDP, the GDP was quite good. That's why boost the dollar. Then the next day, as we all know, come up with the Fitch event, when Fitch downgrade the US credit rating, and also then that's the thing that will hammer the dollar, hinder the dollar to trade higher. So it's a rather mixed result. You have a good factor, have a no negative factor that impacting the dollar in the past. So it's up for you to give a guess, give a prediction on what's the numbers going to come up. And after this, I also want to share with you guys some of the past result that you can see that from the example, you can tell there was also have a different reaction, even like when the non-farm payroll came out very high, but the dollar plunged. Also, when the non-farm payroll show a very good number and dollar appreciate. So first one I want to show you guys is the 10th of March. So in the March, they unveiled the February NFP. So remember this number. So the forecasted number was just 205K, but the actual number came out at 311K. So this is, as you can tell, it's a good reading, right? It's like 100K more. Okay, so 10th of March. So we go back to 10th of March. Okay, from here, this is 10th of March. This is when the NFP was announced. You can see there's a big punch. Remember, the number was good from the prediction of 205K up to the actual number was 311K. But the market perceive it, or maybe that on that day, or have some other factor. Maybe the unemployment rate was not good, something like that. That's why you have a bigger impact on the dollar. That's why the dollar plunged. So just purely look at the NFP. If you check on the news, you will also sometimes lead you to the wrong direction. You will incur losses. So you have to be very, very careful. Okay, I will also like to show you another example, which is on the May 5th. See, the forecasted number was 180K, and the actual number came out with 253K, which is also roughly about nearly 80K more. But you can see in May 5th, there's no much of a movement for the dollar. it actually went sideways. So let's say if you trade on the day, no matter if you open a long position or a short position, maybe it will hit both. Everyone going to lose. Yeah. So it's also, sometimes we have to follow the smart money, we have to follow the hot money, we have to think what's the market going to perceive with all the economic data that we have that's available with for us, all the retailer, and from there we can get. Also, maybe sometimes if we trade wrongly, we incur losses. Maybe we have to learn from the mistake. The last example I want to share with you guys was the one that on July 7. So this was the forecasted number was 225K, and the actual number came short, was just like 209K. That was the last month result. And then this time, July the 7th. Yep. This time the market follow. So the market actually react accordingly to what we think. We think that the number came out short and also came out relatively lower than the previous reading, and also then that's why the dollar plunged after the data was released. So from here, from all these three example to share with you guys, you can see sometimes it's not very, just focus on the NFP, and then it's very easy to catch the price movement for the dollar and as well as other asset classes. So go back to our slide. Beside the NFP, so on this Friday today, this will be the NFP result release day. Beside that, for next week, there's also several other important economic data you can pay attention on, so you can track accordingly to the economic data. The first one is Tuesday, next Tuesday, 8 August. They will release this German CPI data. So we know that the Germany will be the most component or the most important member country in the euro. So if let's say the German CPI increase higher than the now market prediction, then they will have a very positive impact on the euro. So you can open a long position for the euro. Yep. So this is German CPI that you can pay attention on. And then also the next day, Wednesday, there will be the crude oil inventory. Previous reading is have a very, very steep drawdown, declined by 17 million barrel. So let's say if the number come lesser or actually some increment in their inventory, and then it will have a negative impact on the oil price. But yeah, as we all know, if anyone traded the oil prices since early July, I guess you guys I make a pretty handsome profit, because I think since early July the oil prices rebound steeply for WTI is rebound from like 76 USD per barrel up to today nearly 82 USD per barrel. Yep, you definitely is a very important asset class you can pay attention on. It does have a very good movement and also big volatility. And moving on is a very crucial economic data is the US CPI. So US CPI, from here you can tell the inflation rate in the US. So if let's say the CPI is higher, it means that it tells us the Feds might be more harsh, will be more aggressive. They will implement more hawkish monetary policy to their country, so that as a result will boost the dollar to go higher. Okay. And also on Friday, next Friday is the UK GDP. This will have an impact on the pound sterling. Again, if good GDP, then the sterling might be further boost up, because now for the past 2 weeks, I think the sterling was traded quite sluggish
quite as a downtrend, especially against the strong USD. So if let's say next Friday the US the UK GDP, UK GDP show a very good reading, then definitely will have a positive impact on the sterling. Yeah. But then also you guys have aware that recently there's no big news in the market where the Fitch, the credit rating agency, they cut the US credit. This means that in a way, when they cut it, the credit rating of the US means that they have no confidence in the US economy, so people will start to sell the US Treasury, and the US Treasury, the bond price drop. So when the bond price drop, the US Treasury yield goes up. So when the US Treasury yields goes up, they will lead to an increase in the interest rate in the US. And from here, from increase in the interest rate of the US, it will have a positive reaction on the dollar. So you can see after the news is disclosed on Wednesday, actually have a very good impact on the dollar. The dollar actually went up, right? So yeah, this is what happened when the Fitch cuts downgrade the US credit rating. Actually, the dollar react positively against the news, the development, and even up until now, it will still continue to get a support above 102. I think it's about time for the US non-farm payroll. Yep. I think in about 1 minute or two, they will have this release about the US non-farm payroll, and we can actually have you guys place your order yet? My advice is, if you really want to trade on the news, maybe you can set the buy stop. So when the price is already react, and then you hit your order, and then from there you enter, is safer. Safer than you open position on the spot, or if you open a buy limit or a sell limit. So it's either you open a sell stop or buy stop, I think would be relatively safer. And a more safer strategy is you observe first. Either you open like a hourly candlestick or 2-hour candlestick. You wait for the second candlestick, so that movement, you can actually tell how the market react on this piece of economic data. Then from there, you observe first before you place any order. That would be very safe for you. But for my take, so this is just my takes, yeah. So you make your own decision. I cannot guarantee you, but because since Wednesday, oh yeah, the numbers has already came out. I think you can have a very big price reaction for the dollar. So the non-farm payroll came out short, worse than the forecasted number. 200K it is just 187K. But also at the same time, the unemployment rate is lower than what is predicted, as well as there is an increase in the average hourly earning. So again, this is a very mixed data. You have the factor that push the dollar up, and also we have the factor that hammer the dollar down. Oh, but yeah, maybe the NFP reading have an upper hand. People focus on this particular economic data more. So yep, the dollar, maybe we put hourly. Yeah, the dollar actually plunged after the data is released. Anyone has opened a short position? Congratulations. Yep. But For the gold price, I think, yep, it's still yet to break above our resistance here. Yep, I just want to share with you guys what my takes for the gold. So for me, hold on. Where is it? Yeah. For me, I think the gold price have already dropped below this ascending triangle, and also if you draw this Fibonacci retracement, you can actually see that now the gold price is actually traded well below this 61.8% of the Fibonacci retracement level. So my take is at the moment gold is quite bearish unless it's break above this strong resistance, which is nearly about 1940 or 1940, about this level, and then will be a bullish factor, a bullish signal for the gold price. Or else in the longer run or in the near term, I would say it's a bearish take for me lah. But that will be just my advice. That is up to you. But today the NFP actually supported the gold price because when the dollar dropped, and then the gold will trade higher because they have this inverse relationship. When the dollar is depreciate, and then the gold price will go up. It is the same for the oil price. If let's say the dollar goes down, and then the US oil will have a negative relationship with the dollar, the US oil will have the tendency to trade higher. So here now also I have a very crucial spot about 82.3, about this level, because if let's say they form a double top, could fail to break above, it means have a trend reversal lah. Maybe the US oil will trade lower from here. But let's say that is not the case. If let's say if I put it here, there's like a resistance, like a short-term resistance level here. If let's say the oil, the price can break above this and continue to trade higher, then yep, sky is the limit at the moment for the oil price. Oil price might go higher. Yep. And also, if let's say the US oil trade higher, they will also definitely have a very good impact on the Canadian dollar, say the UC pair. And now also is a very similar situation with the US oil, because now we have this short-term resistance here. It's like forming a double top. But seems like now the Canadian dollar is breaking this resistance. It might continue to surge. So yeah, when also adding that the US, the DXY is not doing so well, then but I don't know why it still allowed the UC pair to break above. If later on they react correctly with the NFP result, maybe will still being suppressed by this level. Yep. So you can definitely pay attention on the asset class that I mentioned earlier, for the gold, for USD, and for the Canadian dollar. And this is what I say just now, for like GBP, for Euro, for Australian dollar, for New Zealand dollar, they have the inverse relationship with the US dollar. So just now when the US dollar drop, as a result, it will boost the currency for other major pairs to go up. And if you use a shorter time frame, you can actually see now the market actually react very differently from just now a big drop, and then now they already start to swing. So now maybe the market also start to take in the consideration of the higher wage growth in the US as well as the lower unemployment rate. Because this means that the economy in the US is still doing good. If the US economy is still doing good, maybe the Fed will introduce a more aggressive, a more hawkish monetary policy. So then from there, will definitely support the dollar to trade higher. Okay. And also just to let you guys know, we have no FOMC meeting in August. We have to wait until nearly the late September. Only we will have the next Fed's interest rate decision announcement. So now widely there will be just left two options for the Fed, which is pause the rate high, 0% increase, or 25 basis point. That will be, depends on these 2 months of the US economic data. But currently, according to the CME FedWatch 2, 80%, about 80% of the investor in the market predict 0 BPS. Means that they expect the Fed to pause the rate hike again, and only about 20% of the investor expect another 25 basis point rate hike. If that is the case, and then this is definitely a boost for the US dollar, because now the market already have this story that's circulating around. They say now is already the peak for the Fed rate. The Federal Reserve might not going to increase any interest rate from now on, because now seems like the inflation in the US is already under control. Yeah. So if let's say in the September, definitely maybe on the day we will have another webinar. We can watch the decision that the Federal Reserve made. We can watch it together, and of course, you guys are welcome to watch it with us. Maybe then we can trade together. Yep. The technical analysis I already discussed with you guys. So once again, congratulations whoever successfully catch the trend, short the dollar, or open a long position for gold and other major currency pairs. Congrats. And those that fail to make any profit from here, maybe we can learn from mistake, and then we can discuss this the next time. Now we open up for questions. You can type in the Q&A box and see if I can answer your question. Any question for you guys? If no more questions, so the next, thank you for support, Calvin. Okay, just like a preview for you guys. The next one I think will be on the 16th August. We will have another webinar. There we will talk more about also fundamental for the geopolitical events and the relationship, the impact on the market on various asset classes. You guys are welcome to join us on 16 August. Join us on the day, then we can learn together. We can make profit together. Thank you. Thank you, Collins. Thank you, Mustafa. Thank you, guys. So see you guys next time. Bye. Thanks, Manolito. Bye-bye.